So every transaction that takes place in the business impacts the financial records. For every debit, there is an equal but opposite credit. To take the summary of all the transactions of the business and prepare a profit and loss statement and a balance sheet, accountants used to use what was known as a 10-column worksheet. Columns 1 and 2 showed the trial balance. The trial balance lists all the general ledger accounts as listed on the profit and loss and balance sheet. The amount listed is the balance, or the value, of each account at balance date. This was taken from the general ledger and was a sum of the opening balance plus the movement in each account from all the transactions that took place during the trading period. In columns 3 and 4, any adjustments were made. In the example on the screen, a $348,000 adjustment has been made for closing stock. Other adjustments that could have been made could include allowances for prepayments or accrued expenses. You'll learn more about these later in this course. Next, the trading account items were added to columns 5 and 6. The net of these two columns calculated out the gross profit of the business during the trading period. You can see it at the bottom here, $748,000 in gross profit. In columns 7 and 8, the gross profit is carried over from the trading account columns and all the other operating expenses deducted to give net profit. You can see the net profit is calculated out here at $223,000. If you look at the very bottom row, both the debits and the credit columns of each set of accounts balance. Columns 5 through to 8 are used to provide all the figures needed to produce the profit and loss statement. And then lastly, the balance sheet items were carried across into columns 9 and 10, and net profit carried across from columns 7 and 8. Net profit is added to the equity section of the balance sheet.